What's up, guys? Welcome back. So basically today we had a speech from Jerome Powell at around 1:30 where he kind of gave a summary of like an economic outlook, and then based on that he said he did not want to over tighten, so he plans on maybe going softer with the rate hikes, which is like 0.5 or 50 basis points basically, which is 0.50% increase on the interest rates. They usually do 75 basis points, which is 0.75, which is like more a harsher tightening process. But basically he said he might do a slower rate hike basically, right? So if he's doing a slower rate hike, that's like easing financial conditions, which actually might be our first sign of a pivot, and a first sign of a pivot means the market might continue to rally up. So I want to pay attention to this. So what I'm viewing this like is there's like I would say there's a higher chance of the market to continue rallying if we're looking like we're gonna start slowing down the pace of rate hikes and probably even pivoting, right? So basically today I entered to the sell side, right? I entered a trade, and I'm showing you on the screen right now from my phone. So these are all the trades I took today. I entered to the sell side with a market order, right? I basically had a 1 to 3 risk reward, and then as soon as I got knocked out, I didn't make any more trades. I didn't want to chase the trade. Essentially, it's not good to chase the trade, especially when you just had a loser, because you're kind of like trading more like FOMO, or psychologically you shouldn't be trading that. You're like angry or sad or revenge trading. That's the right word for it. So I didn't want to revenge trade. I basically lost $52 on that trade, and I called it a loss. I didn't want to trade it, although if I had caught the right way I would have gotten all of the trade to the upside. But let's save that for another time. I don't want to chase it just because I missed out on the opportunity. But basically, as what I do in every other video, I give you a breakdown of the trade I took today, why I took it, and then possibly how I could have improved. So today the first trade was a market order at 11.16, and the price was 28132. So at 11.16, so I'm gonna go to the 2 o'clock candle here. So the 2 o'clock candle today was the 11 o'clock candle. So you can see on days like today, when you have like important speakers, the market basically really goes sideways, like it's just consolidating just in one zone, right? So basically off this 28132, let me see how fast I can find it. 28132, so right there on the 11 o'clock candle. So right there was the entry, right? And you see at the same time I created my stop loss, which was just a 1. So I risked 1. So I could only lose at max $50 to $52 for this trade. And that's right at this level here. That's where I had the stop loss right there. So you see, as soon as the market started to go that direction, that's where I got hit out. When the market began to go against me, that's where I got hit out, right? So you can see at what time did the take profit, did the stop loss get hit? I like to say take profit because I'd rather be hit at take profit, you know. But basically I got hit out at 1:30. So this was around 1:30. And to show you what it looks like on the DXY, so this was the morning candle, right? This was the morning. So imagine you had a huge push up green candle, clear up everything here, and then I had like a red candle here. Then you had some support found here, and I was believing that it could have continued up. And then I just basically, so today I was working on a furnace, so we were installing a furnace somewhere, right? And I basically just focused on what I was doing on the furnace. I was like I was converting it from natural gas to propane. So basically while converting that, I didn't have much time to be paying attention to the charts. I wanted to make sure the furnace was converted correctly, because those things can be dangerous. But there are a lot of safety components when it comes to a furnace that protects it from going crazy. So basically this was a candle on the DXY. So anytime the DXY goes down, you expect some bullish movement in the market, and you can see the exact relation between this. So you have the candle here, the big red here, and you can see this same big red is the same big green on the QQQ. So you can see some big confluence right here. So I have like some people that come and tell me that, oh, it's not that straightforward, you don't see a relationship between the dollar and the QQQ. It's not like direct, like you see a big red candle on the dollar and you see a big green on the candle, a big green candle on the QQQ. And I'm like, no, it's clearly there. It's something that I pay attention to, and that's why I'm telling you that this is something that I'm seeing, right? So I was playing for the QQQ to continue down based on this huge red candle, this huge green candle. So I saw a huge green candle here, so I'm thinking, okay, this might have set the tone for the day and we might have had more downside on the QQQ. Only to my surprise, and this is how news can affect you in the stock market. If somebody important like the Federal Reserve chairman comes out and says something against your position, believe me, there's nothing that can stop that play from going in the direction that he pushes it, or that the market interprets it. So I want you to be clear of that, and that's something I have gained a personal understanding, even from just losing money on trades and constantly trading them, constantly working on my strategy. That's where I've seen, like, anytime a factor comes in that affects your position, it's going to move. I'm guaranteeing you it. So that's basically what I saw today, and that was just one trade I made today. As I said, this platform, it's off on the platform that I'm showing you on the computer, but when I show you on my phone, you can see I placed this trade 11:30 at 1:30 p.m. right? So basically the total loss for that was just $52, and that was just one position. I didn't bother to force it. I was just working on my strategy, stick to my strategy. I could have flipped the other way. Yes, it works sometime, but I didn't want to force it. But basically, let me get rid of this now and we get into more. What really did Jerome Powell say, and how does this affect QQQ? How does this affect the dollar? How does this affect Bitcoin? How does this affect futures? We're going to look at that, and I'll try to keep the video relatively short at the same time. So you see the dollar still continuing to move down like a bullish indicator. Let's watch this guy, all right? Don't forget, it's a Bitcoin broke above 17,000 today, just on that news. So if you go to CNBC, you can literally type in what did Jerome Powell say today, right? And you can see exactly what he said today and what caused that move. So basically the key points from CNBC is Federal Reserve Chairman Jerome Powell confirmed Wednesday that a smaller interest rate increase are likely ahead and could start in December. So basically, and you can see that in the last part of my previous video, I said this: if Jerome Powell says he's gonna do smaller rate hikes, this is bullish for the markets. If he's still gonna do 75 basis points, this is bearish for the markets, right? So he basically comes out today and said, oh, he doesn't want to over tighten. He would rather do like a soft landing, and the market prefers that. He's basically saying, okay, if the economic conditions start to get too tight and then the market starts to really push down, he might pivot, or he might start to go slower with the interest rates. He might do 50 basis points, 25 basis points. But what this also indicates to the market is that we are probably closer to the end of tightening. So we might have hiked it up, and then we start to gradually get to the top. When we get to the top, that's when we have a pivot, hopefully. And then when we have a pivot, that's when interest rates start to go down. That's when money starts to get cheaper. That's when stocks start to go up again. That's when a lot of things start to happen. So basically, Another point, but he cautioned that monetary policy is likely to stay restrictive for some time until real signs of progress emerge on inflation. So he's basically saying he might do 0.5, he might do 0.25, he might just be slowing down the rate, right? But the market took that essentially as bullish today. So as you see, this is the 1 o'clock candle on Bitcoin. So you see, Bitcoin was basically in the range for today as well. As soon as the news basically came out, we have a big green continuation. And I'm thinking we might just have a green end to the rest of the week as the market continues to interpret this news. Look at this. Look at this. Look at this. So this is Nasdaq futures. If you go to trading view, you look for NQ, and this is 1 o'clock, right? At 1 o'clock, the Nasdaq futures, as soon as it heard the news, you have a huge green. Take out all of this previous market movement. Another huge green. Another huge green. And basically more huge green. And I don't think we're gonna come back down basically here for just as the market continues to digest that information. And then most people don't like to try and short the market. If the market starts to go up, people say, okay, it's time to buy. Buy. People are going to buy. The robots are going to buy. The algorithms are going to buy. The institutions are going to try to buy. Everybody's going to try to front run it. And we also have something called the Santa Claus rally. So look at the irony of that. Tomorrow is December, right? Tomorrow is December. And it's like we're going to say, okay, going into December, we might just rally. But we have another something important coming up with Jerome Powell coming to speak on December 18th, if I'm not mistaken. December 18th, Jerome Powell. Let me see. When is the next Jerome Powell speech? December 13th. Okay, so he's gonna have another speech December 13th. So we have December 13th, and we also have the next CPI. Pardon. So those are the next things that will control some form of movement in the market. But as it looks now, we might be even bullish biased. And then I heard some news today about us possibly being above the 200 EMA. No, well, not on this, not on the QQQ, but possibly for the SPY. I think we're above there. Yep. This is very interesting. So on the daily, on the weekly, we've been above the 200 EMA, right? But on the daily, we're above. On the daily, we're coming above the 200 EMA. So I'm not sure is on what time. I'm not sure on what timing they mentioned us being above the 200 EMA, but that's very key. Very key here. Because once we begin to go above the 200 EMA, that's when we start to get very bullish. But I'm not certain which ticker they were speaking about. S&P 500. Is it that one? No, because that barely came down. I'm not certain what ticker exactly they were talking about being above the 200 EMA, because it seems like we're above the 200 EMA in April. We're above the 20. Okay. So possibly the S&P 500, the US 500 is the same thing. So we're riding under here. We kind of got above the 200 EMA in August. So I'm not sure what's with the incorrect information. So we got above the 200 EMA in August, and then around November again, it seems like we're going above the 200 EMA again, which is quite bullish. I mean, it's bullish with you have like kind of loosening of monetary policy, which the market loves. So basically that's it. I'm thinking the market might be bullish again, even for a short time period, and let's just see how it goes. Basically, it's good that I was able to show you my trade, show you the mistake, tell you what I was doing. I only took a $50 loss, so I stuck to the trade. I didn't want to revenge trade and try to catch any other thing just because I figured the market would have continued that way. That's not how I want to trade it, because if it had went the other way, I would have been double burnt. But basically that's it. Thank you if you actually watched this video, and I'll see you tomorrow. Bye bye.